The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, wheat and crude oil found a little bit of strength on Monday. Row crops were relatively mixed, some pressure in beans and bean meal. Harvest continuing across much of the U.S. That's a talking point, no doubt. Livestock trade relatively mixed. Some pressure in equities, too, on Monday. A lot of things for us to discuss. Joining us now, John Heimberg with Total Farm Marketing as our guest analyst here today. John, thanks for joining us. Hope you had a great weekend. And, by and large, it felt like a quiet day on Monday in terms of the ag markets with the grains. I'd heard some talk of maybe another grain vessel getting hit in the Ukraine, in the Black Sea. Maybe gave the wheat market a little premium. But outside of that, I didn't find much in the way of fresh news as we roll through harvest here in the U.S., John.
Yeah, pretty quiet day overall to start the week. And, with the USDA report coming on Friday, not sure how much the market wants to stick its neck out one way or another here, especially we've had some correction. We've seen prices come off those highs. The funds have really moved out of their short position, so they might be in sit back and wait mode right now, see which way they want to push this market for corn, soybeans, and wheat. In terms of how much they've shaved out of that net short of those three combined is kind of an astronomical move. So really, like I said, very quiet day today. Got a penny higher out of corn, a couple pennies down on beans, a few pennies higher on the wheat market. Again, harvest continues to roll, so that limits the upside for corn and beans. And, the wheat market's really keeping a close eye on what's happening in terms of the Black Sea region more than on the geopolitical side, plus just the weather side. There is some talk last week, some rain could start building in that area. So that was some of the reason I thought we saw some premium come out of the wheat market last week. Not sure it's all materializing yet, but those are things that are on the radar. If rain does pick up in that area, Russian wheat does control the wheat market in terms of price on the global scale. And if the conditions improve, I could take some more premium out of this wheat market here too. So those are things we're kind of watching. Obviously, you still got the big bell cow over top of the soybean market. What's going on with that South American weather, which you're starting to see a little bit more scattered precipitation. Forecasts are still talking for more wetness to build. And if that's the case, then they're going to continue to take a little more weather premium out of the soybean market as well here, especially if they feel a little more comfortable about those supplies coming into play. So, that's a little bit of where we are this week in terms of its Monday trade, just kind of trying to figure it all out a little bit.
Yeah, and to your point about South American weather with soybeans, I know I've heard a lot the last couple of days that a lot of soybeans have been getting combined across the Midwest here. I know it's been very dry in many areas. We've seen a rapid maturity of soybeans in many, many areas. And so you're faced with, I think, either for the most part, farmers moving soybean bushels to town like they traditionally do, not necessarily putting those in storage. And I think some of that harvest pressure is also adding into the soy complex, which I looked at the November chart, looked like we tested support overnight at 1029 and then finished the day about a nickel above that. So we're kind of down towards the bottom end of recent support, it looks like, in beans here, John.
We are at least in the short term in terms of some moving averages. Obviously, we still got a lot of rally that could come out of this market here. So I'm very cautious, still holding on to any, if guys have bushels, they're going to be moving in the next 4 weeks or so. I'm looking at those December puts that are tied to the January price, or even November puts if they know they're going to move things out. Don't have a lot of time in those. And realistically, if the report comes in a little bit on the favorable side, that value in those November options will disappear in a hurry. So I kind of like some of those puts that are out there. They're not expensive, especially if you're going to do something with those beans. Now, last couple of days here, I've picked up quite a few phone calls of guys going, I've got some extra beans. What should I do with them? Mentality. And, right now the recommendation that I've been saying is, let's look at, you can put money towards your capital loans. You don't have to deal with storing them. Just, you got a rally here, move them to the market. And just collect the premium or the money off those extra bushels. But it's been interesting. I've been hearing that a little bit more in the phone conversations of those yields are out there pretty decently, even with the dry weather. There's still a very good crop of beans rolling in here. We expect harvest to be about 45% complete today on the USDA numbers. Weather does not look like it's going to slow us down anytime soon. Corn side about 30% complete today, maybe a little over. So things are going to move along quickly, and that's just going to put a pile of things into the pipeline. Probably going to see the impact on the cash market first, obviously with basis and things of that nature, especially as these elevators start getting a little bit full in terms of those beans as well as corn coming in.
Yeah, and so with that in mind, I'd have to think it's worth us reiterating a little bit here for producers that if they're well behind on sales, things like that, need to do some risk management. I know these price levels are not super attractive, but if it's your worst sale and maybe we get some rally here post harvest, things like that, at least it's a bit of a starting point, right, John?
Very much so, and realistically, in the soybean market, the fundamentals on the global scale are still extremely poor. I actually felt like the fact that we rallied well over $1 right at the harvest window, it felt like a bit of a gift. Gave guys the opportunity to go sell some $10 beans again, and hopefully they took advantage of it. We're still looking at a carry out if bean yield goes up slightly, which is what the expectation, I believe, is for that report on Friday. Not a big move, but even in the bean market, a subtle move adds, 10, 20 million bushels to a very heavy carryout picture. And if you're talking 500 million plus bushels of carryover, you're not going to be looking at 1050 beans in terms of the market price. And if the Brazil weather does straighten out, and even if they do have some issues, we're still going to see 160 million ton crop come out of that region, which is only going to make that global soybean supply even bigger yet as we move into the spring. So still staying very defensive in the soybean market until proven otherwise. And again, when you get opportunities like the rally we've seen over the last couple of weeks, that turns into an opportunity to get some sales done or defend things if you want to hold them into the spring.
Felt like here in recent days, the dollar's been a bit of a safe haven for some traders, maybe just getting out of various commodities, etc. Of course, crude oil spiking on the Middle East tensions, continuing that on Monday. I wonder, though, looking at Monday afternoon, stocks, the Dow, NASDAQ, S&P, all under pressure. The dollar turning lower. Scratching my head a little bit here. If I'm missing a headline or something, I wonder if some of that move on Monday is a case of money moving around or if there's something else going on here we need to watch, John.
Really that's where the energy right now in the marketplace is in the outside market, not so much in the ag sector. We haven't got to the livestock cattle side of things today. Very, very quiet day there as well. Maybe some wait and see. First off, let's look at those outside markets. Obviously, you got the issues going on between Iran and Israel. Crude oil breaking through to the $76, $77 window today. Another couple bucks higher, surging here in the late afternoon again, pushing $3 higher on the day. That should almost help out the commodity complex, but it just seems like they stayed on the sidelines with that today. On top of that, too, there's just something going on in those currency markets. I'm not an expert there by any stretch. I don't work with them as much as I do like the ag sector. But you look at the 10-year Treasury note, it has basically dropped to its lowest point in terms of since July in a very quick order. Okay, we typically don't see strong moves one way or another like that unless something's brewing. Obviously, when the Treasury note goes down in value, interest rates go up. And so that's kind of weighing in the market here. So it just kind of makes you wonder if something's kind of maybe brewing under the radar. Maybe the economy is not where it is. The stock market is overinflated in terms of funds. Like you said, rolling over fairly big again today. We're down over 500 points here at the 2 o'clock hour on those Dow futures. So the outside markets might be kind of the key here. And you mentioned the U.S. dollar. It's had one heck of a rally here. It's rallied basically to its highest point since early July. Since the rate cut, and it should have actually been the other way around. So there's some outside indicators that are saying we don't agree with what the Fed did in terms of where the market's acting at this moment. And those could be some big things as, we start watching the VIX and the volatility index, which is starting to move to the upside. We could see a major risk off day coming triggered by some of those outside markets. So that's another piece that, these next 30 days until we determine who's the president of our country, as well as the geopolitical side of things, we could have a lot of volatility in these marketplaces. another reason for producers to think about the defensive side of things here. I'd rather be wrong with puts and let the market prices go higher than wishing I would have.
That's a great point. Just the fact that I think all of these outside markets, whatever may be happening, they're all interconnected in some way, shape, or form. And when you put it back to grains and livestock in particular, managing your risk when there's uncertainty and volatility in front of us is ever so important, John.
Yeah, very much so. And like I said, right now we're in a total stage of, total stage of uncertainty going forward here with the election right around the corner. And I think you're going to see a lot of money moving one way or another just to kind of get a feel. And like I said, the fact that the funds ran out of that short position, that move was not based off of fundamentals. Okay. There was really, Brazil was hot and dry. That may have added a little bit of premium into the market there. Corn demand has been pretty good, so that adds a little premium. But to see them walk away, from realistically 300,000 corn contracts since the low in July, okay, and as well as the massive amount of being long wheat, or short wheat contracts, on purely just a non-fundamental move, kind of makes you a little anxious that, okay, we get through this period of chaos here, and that's the best word I'm going to have for it, because that's what it feels like. And we get some stability in terms of whoever's in charge, in terms of the presidency or things of that nature. Where do they go from there? They go back to the fundamentals. If the fundamentals are still on the bearish side of things, they'll gladly go right back into that short position and push it that way. They actually did this back before that July low. We had a pretty big short position. They rallied it out in June to almost this same level in corn and decided to put the foot back on it again, going into the fall.
John Heinberg with Total Farm Marketing, our guest analyst here today. John, let's touch on livestock as well here. I know you mentioned earlier, quiet day, cattle, hog trade. In terms of cattle, I was looking at the cash deliveries last week and where things stood there, and it looked like the bulk of things, about 82% of head, were committed to nearby delivery. So I have to wonder if that's going to help support this cash cattle market this week to be at least steady, if not slightly higher again, John.
I'm agreeing with you at that, barring an outside influence that comes into play. Now, cattle numbers in general, when you look at them, they're still extremely tight, and the cash market is still looking for animals here. We expect the show list of available animals to be a little bit tighter this week than it was last week. That fundamental is still there and supporting this market. Now, again, talking about concerns on the volatility side, looking at the front end live cattle, we're talking a $20 plus rally going into a high level of volatility here. So I've been putting some defensive positions on. Not that I don't think it can go higher, but we've been around the cattle market long enough to know that, all right, we want to go lower. Boom, $10 comes out of the market in a pretty big hurry. So we're just being cautious of those things. For the producer, using, especially in the shorter term, puts are very cheap in terms of the overall risk. If you're wrong, you're still looking at 186, 87, maybe 88 if we continue to trend higher in the cash market here. The other thing that's a bit of a factor that I'm kind of watching, we are putting some massive cattle in terms of carcass weights out there right now. So that's still putting pounds in the cooler despite our lower numbers. Retail values softened up back down to the 300 window, did find a little bit of footing on Friday afternoon and today at midday, so maybe that'll keep this cash market supported. But we're at a point here, like I said, just historically, that $20 window is starting to look pretty strong, especially how fast we've gotten here. That this market could be poised to take a little bit of air out. So I'm a little bit cautious, but as I think I even said it last week, I'm cautiously bearish in the cattle market here.
Fair enough. Hogs look like it's got some good support from pork cutout values, up over $2 on Monday. And I guess my thought in this hog trade is it's been pretty sideways, but maybe we'll get a little upside here, maybe close that gap between October and December hog futures here potentially, John.
We'll have to see how that kind of plays out. That was definitely the price action today in terms of that gap closing. We saw those December hogs over $1 higher at one time today, and October is a week away from coming off the books, so we're getting to that window here now. Now, typically, I looked at that spread over the last handful of years. Normally, it sits in that $8 to $10 spread difference. So, So we'll have to see how this plays out. We were there last week. We're still at $7 between the two. Maybe it's, to a point where it's as narrow as it needs to get here as the market goes through. Yeah, I guess the biggest thing we have to keep an eye on is really where's the cash index, 84, so a little bit above, the October contract, still $8 above that, obviously that December contract. So we'll have to, but the trend has still been lower. We've been down about 8 straight weeks in that cash index. So I don't know. We'll see where we are. We've had a heck of a move. Nice pop out today. I didn't like the fact, even though we still did finish 70 cents higher, 67.5 cents higher, that December contract kind of ran out of gas when it got up towards that 77 window today. So I think next few sessions could be kind of key. Like you said, retail value is good day to day. So that maybe that's something that can keep this market supported in here. But we're just in a window. We've added a lot of value into that December contract. Are we getting too rich or getting out of our skis a little too much? Kind of like the same cautiously bearish mentality I talked about with, the live cattle market.
Real quick, any notes in the dairy markets here today, John?
Dairy markets have seen a pretty big price recovery. Another difficult day today is, we watched cheese prices. We were sitting at $2.30 for blocks. Today we're at $1.90. And that's happened fast, and obviously that's taken the value out of the market. And that was some of the things we were reading, that the demand for cheese, at least in certain types of cheeses, was really starting to slow down. Maybe that's a reflection on the consumer. We're into the bulk of football season and that back to school. Mozzarella cheese still got some pretty good demand for the pizza window, but some of those other cheeses are starting to fall back. And obviously when those prices came tumbling the way they did, the milk market came with it. Now it's a matter, can we find some bottom here with another 30-cent down day in the November, 40 cents down in December? It's been a pretty big washout. We were sitting at $23 on November milk just 4 or 5 days ago, and today we're at 21. So it tells you how quickly the market can take value away. We talked about that a few weeks back. The milk market is one of those ones, kind of like a cattle market. When they want to pull the rug, it has a tendency to go quickly, maybe a little bit more aggressive than the fundamentals determine. So with that, for producers, hopefully you took advantage of the rally we got. Now we just need to see if we can find some floor.
John, good stuff as always. Anything final you want to share or reiterate for folks here today as we wrap it up?
I'll just get back to that one point I was pounding on it earlier. We are in a window for these next 30 days until we get to vote in early November. Who's in terms of who's running the country, between the geopolitical, between the campaign issues, all those things going together, the volatility will stay high. Make sure you're taking care of that, the value that's in the market that we now got here a little bit. I know it's not great, but it's sure a lot better than when we were thinking $3.50 for corn. I'll take the 4 1/4. Okay. Or we were thinking $8 for beans. I'll be much happier here at $10.30.
If folks want to reach out and have a conversation with you there at Total Farm Marketing, John, how can they get in touch with you?
Feel free to give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget that website, totalfarmmarketing.com.
John Heinberg, always good to talk with you. Thanks for joining us here on Market Talk. Appreciate it.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.